Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at a longer term picture of the Nifty on 15 and 60 minute charts. But as usual, let's start with our risk disclaimer. I'll just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. Right, let's have a look at a Nifty chart. The one I wanted to look at was on a slightly longer term on a 15-minute chart. And in particular, you can see we had a lovely TS1 Holy Grail trade setup. So what is a Holy Grail trade setup? Well, a Holy Grail trade setup is where we have an ABC correction. If I right mouse click, do Elliott wave minor, can you see how we had an ABC? So the market made an ABC correction, but more importantly, it made that in a wave 2. Because now if I right mouse click down here and I do Elliott wave major, can you see how this was a wave 1? This was a wave 2, but more importantly the wave 2 subdivided into an ABC, and after that followed a strong wave 3. Why is that important? Well, because wave 3 is typically the strongest and longest in a completed 5-wave sequence, so represents the largest potential profit for smallest initial risk. So that's why we've nicknamed this a Holy Grail trade setup, not because it has a high percentage of winners, that's not what it's all about, it's because it has a low initial risk for the potential profit. But also what we want to do is we want to make sure that we're coming off a higher time frame support or resistance. In this case, that this high here is a higher time frame resistance. So for this we go out to the higher time frame chart. So as this is a 15-minute, we'd go out to the hourly, and then we'd go back and look at the DP from the prior swing. So here we have a swing down into the low here. This is the last swing into the low. This is an important one that we use a lot. If you're an MTPredictor customer, you'll know about this. So we go back to the prior pivot high here, right mouse click, point decision point on, and now you can see it gave an area of resistance. But the important point is that this resistance would have been on the chart in advance. So even before the market even got up here, this resistance area would have been here days and days and days before the market even got there. It's a leading indicator. It's there before the market even gets there. And I'll just show you that by using our training mode. I'll just jump back to here somewhere, and again put the resistance level on, and there it is. Can you see there it is? On the chart in advance. If we turn training mode off, you can see that's exactly what happened. The market went up into that level, they came back down again. So now when we come down to our 15-minute chart, can you see how the sequence starts at this level here? So we're starting our Elliott wave sequence at an important high, or more importantly a high that unfolded or gave meaningful resistance on a higher time frame chart. So the initial decline down will be wave 1, the initial correction will be wave 2, and then we're looking for a strong wave 3. So I just clear this all off, just refresh the chart, and if I place the analysis on this red cell bar here, you can see this would have given us our initial targets, which again is the typical wave 3, which is our wave 3 target. And remember we use position sizing. I'll just change that to our Indian rupee account. Here we keep our initial risk small and under control, so this would give it the number of contracts to trade. As you can see, the initial risk would have been kept small, so if this had been a losing trade, would have considered this a 1-hour loss. But this is why we like the Holy Grail trade setup, because when it goes as anticipated, the profits are large, but just not large in dollars, or in this case rupees. This large in relation to the initial risk. So at the target here, the profit will be potential 4.6, or approximately 4.5 times the initial risk. Is there anything we can do now to perhaps try and capture it as the market carries on down? Well, as usual, let's go out to the higher time frame chart and let's place our next DP support levels on. Remember, again, we use the last swing into the high, so this one here. So we'd right mouse click off this pivot, do a decision point, and as you can see today, the Bank Nifty is now dropped into this area. We could also do a DP off this main low here, and as you can see, it gives us quite a big DP support zone. But the point being is that we're actually in this support zone here now. So what does that mean for our short trade? Well, a couple of things. You can either look to come out at this level here. If you did, that would be approximately 5.7R, or because the MTP trend is strong, in other words it's beyond our grey strength band here, you perhaps look to trail with our ATR stop. So that'd be about the same place at the moment. So our ATR stop is our red dots here. So either way, you'd be looking at a profit approximately 5.5 times the initial risk. So I hope you can see this is a good example of using MTPredictor on slightly longer term Nifty charts, but also the whole general idea of how we use MTPredictor. We're not using it as a black box system where we blindly take all the setups. You can see there were potential trade setups on the way down here. Can you see this? There were some history triangles, particularly this one on this grey MTP trend here. So this would have been a potential buy setup here. If you had have taken this one, if I right mouse click over the blue buy bar, that would have actually been a losing trade. But can you see how that didn't really fit in with our larger degree analysis on our higher time frame charts? If I clear everything off, on our higher time frame charts, the resistance was there, the support was here, the larger degree trend was probably down in between the two. Therefore you should really be favouring the short side rather than long side. That's why we don't look to use MTPredictor as a black box system where we blindly take all these trade setups in the direction of our MTP trend. We like to look at our higher time frame support and resistance zones and then do some analysis and then look to do trading within the direction of that large degree trend. That's why MTPredictor should be considered a discretionary trading system, not a mechanical one where we look to the higher time frame charts to do your own manual analysis. But anyway, I thought this was a good example to post, and it's one we actually had we were looking at in our MTPredictor trading webinar. We highlighted this particular resistance area as an area where there could be potential resistance, and as you can see the market has declined very nicely off that, in particular giving us a slightly longer time frame 15-minute holy grail sell there, where we could be potentially sitting on about 5.5 times the initial risk. So a good example of using MTPredictor on slightly longer term charts, the 15 and 60 minute charts for the Nifty, which is one of our markets we follow over there in India.